Hi everyone, we're going to continue our series of past big winning stocks in the most recent uptrend, sticking with the year 2012, now reviewing POWR, Power Secure International. Now we need to be honest with these selections. 2012 is now wrapping up. I had a couple of nice selections in FLT, which hasn't worked out yet. It's September. It's starting to work, but it's still early in the uptrend. I don't know it's going to be a big winner yet, and I would consider early 2012 a success, if not for the market. I believe that move would have played out throughout the entire year, but it was what it was. And we had LQDT that tried to be nice, but it didn't fully produce a huge return. And there's others that we have right now that we haven't gone over, like Camp recently, but overall it's still pretty rough. And I'm having still, I believe, I need to go review again. By the end of the year, at the end of the year, it skewed it even, but I believe to this point, I'm having still more losers than winners, something I was never ever used to until 2011. 2011 was the first year ever that I had more losers than winners, and because of my cut loss levels used to be a little bit more wider, had a larger ATR because of how often I was right, 60 to 70% of the time, with my average winners being 3.5 to 4 to 1. It took me a while to adapt to the new market that we started to get after 2010. 09, 010, I start to underperform. 11 and 12 is terrible. So by the time POWR is a signal, I barely take any. It first shows up in my scans on 12.7. I put it on my radar screen. On 12.11, we get our buy signal. It's a solid buy signal. We got a surge in BOP, we got a surge in volume, and we got a surge in price right off the 50-day moving average. Perfect. We see tons of pocket pivot point buy signals, not shown in the chart, but there are some pocket pivot point sell signals. But still, overall, it's not amazing. So with it being a $6 stock, the market the way it is, I trade a six-figure account. It would be much higher, but going through my 20s, I want to remind everybody I'm only 35. This is all I've ever done for a living, and I don't come from a good background, so my early 20s, my lifestyle was a little bit excessive. So with this, I decide that only 1% of my account, I can't go anything bigger than 1% because commissions with interactive brokers will start to get completely out of hand, and the trade doesn't make sense for me. This one would have, in hindsight, had I bought a larger position. But at the time, it didn't make sense, especially the way 2012 is going. I'm looking at another loss again for the year. I'm not used to that. Boom, 1% of the account capital POWR. Now, POWR acts exactly how new longs used to act more often than not, and this is exactly what you want to see. You get long a new stock and you see this, you need to look for additional buy points because this is exactly what you want to see. POWR is excellent, looks wonderful, is acting proper, and all is well. It gets another pocket pivot point buy signal. I don't take it because look at down below. TSV and MACD is trending lower, while TSV is turned up, MACD has not, and we don't have green BOP. With the way that it is, I'm getting better signals and better stocks. I'm passing on this pocket pivot point POWR, and unfortunately, I shouldn't have, as it worked. And as you can see, POWR trends beautifully above the 50-day moving average with not a problem in sight. That is until the 15th. On the 15th, we have our first session where POWR closes below the 20-day moving average on heavy volume. Now, from the time that we went long to now, we have very good gains. But if you look at where we were before that day, we have a 93% gain. While it's close to 100%, it isn't 100%. And anyway, it doesn't matter because it's where you close below the 20-day moving average if you're under or over 100% or not. Because we're not closing below the 20-day moving average and up 100%, this is a 25% sell. So it's a 25% sell. So if I can kind of remember, let's say I have something like, it's going to be a crazy number, like 558 shares long of the stock when I go. Now I'm going to have 418 shares after selling 25%. So we get rid of that. POWR finds its ground and moves higher again. And as you can see, POWR acts perfectly. This is what we were more accustomed to in the pre-QE days. Now, this is kind of a rarity. They still do happen, but there's more 50-day moving average violations. POWR just happens to be the one perfect stock. And now it's getting down to the 50-day moving average. But why aren't we selling with this move down below the 50-day moving average? Because now, as you can see, we have over 147% gain, well over 100% gain. We can now see how this stock acts at the 50-day moving average. And as you can see, it's nice and tight, acts well, everything looks good, and then boom, we're down, and we close below the short-term support. So even though we didn't sell at the first initial crack below the 50-day moving average, we now have a confirmation sell through the 50-day moving average. So me, since I'm up only 123%, not up 150 to 200% preferably like in the old days, this becomes a 25% sell signal. The intraday reversal, yeah, in a really, really, really strong market with where we got total volume confirmation like we did have in 2013, but still, I'm not seeing the gains in a lot of stocks that I used to. Maybe it's not a sell, but here it's a sell. So if you had 418 shares, you're now down to like 314 or so shares. So once again, POWR finds its footing, starts to move higher, and everything is all well with POWR again. And everything is going fine into November, except for we finally have our first sign of something maybe different. Let me go to an arithmetic chart. You can see now POWR's price range is now getting way out of hand. A big wide day on the 6th, a really bad wide day on the 7th, closing below 25-day moving average on heavy volume. Now, since we already took 25% with it down here in September, there's no reason now that we're up so much to need to sell again until we actually get a 50-day moving average break. So this move here in November 7th, I'm not selling at all because we still have over 100% gain above the 50-day moving average. There's no need to sell that one. So as we move along, POWR is finding its footing. Everything looks to be appearing that it's going to go well, and then boom, we crack the 50-day moving average on heavy volume. Now, on this 12-3 day, this is a 50% sell. In a stronger market, I'm probably only selling 25% because I'm still above these September lows, and besides being up the September lows, I've got a good winning stock, and it's above the 50-day moving average. So I'd still be long, and we're up 141%. So why did I sell 50% here? Because, like I said, the price action has significantly changed. Back in August, it tried to break out, gap higher move, and it failed. It tried to gap higher and move again in November, and this time failed extremely dramatically. And now it's actually following through on the first crack below the 50-day moving average on very heavy volume. So that's a 50% sell for me. Now I'm down to about 150, shares long. So right there, now we're on big watch because now that we got the big gain, the 200-day moving average is our final line in the sand. That's where we're going to make our final sell if we're wrong. POWR holds the 200-day moving average, and then boom, it really takes off. None of these days are buyable to me, this move. You just got to watch POWR just get a little crazy, I guess you could say. So POWR this time gaps higher again. Big reversal intraday, closes at the low. I'm now nervous again because once again I see another gap higher even though the stock is now up 291%. Why can't it close strong on these gap ups? Why does it always seem to reverse? So once again, POWR is now on watch. And as you can see, it starts to move sideways. You're getting a lot of different kind of price action. Where you always had open candle bars as you move sideways. I mean, we can go back out and out and out and out. We had open candle bars as we move sideways. For the first time ever, I noticed POWR opening higher, closing lower, opening higher, closing lower, opening higher, closing lower, over and over and over and over. And that then leads to this day on the 7th. Now on this day on the 7th, because now I've seen it do a double fail of another gap up, and because now at this point I'm afraid that the stock market is about to go into a real significant. Look at the distribution in this market. This is after, all the QE-ness, another low volume re-high take, massive divergence, Dow Jones stocks working, NASDAQ stocks not. So with this market the way it looked here in April, and with this move in POWR looking like now it's officially ready to roll over, here's the long-term arithmetic chart. I mean, look at it now. It now appears that it is really ready to roll over. So I am completely out. I sell my final position. I'm completely out of POWR. Now, if you don't sell your final position in POWR, you then get one more clear full sell signal before something really bad happens. POWR then on the 15th confirms for the first time ever in its pattern a second close on above average volume below the 50-day moving average on above average volume with a weak close. September didn't get a weak close. So this is it. So if you're in POWR now and you didn't heed my final sell signal on the website, you now get a second chance at a final sell signal, still locking in a 205% gain. Why is this important? Because watch what happens. POWR finally closes below the I skipped ahead too much, so I know what happens. But POWR closed below the 200-day moving average for the first time, and this technically, in any other world, if I'm not skittish, this is my final sell signal, and I think that I'm leaving with a 187% gain. I swear to God, sometimes I'm never lucky, but sometimes it's better to be lucky than unlucky. But anyway, POWR, by the time we're getting our final sell, like I said, we only had 150 shares. And if you didn't have all of that, and if you didn't sell all of it with that second close in April below the 50-day moving average, you have like 78 shares left off the initial like 560 share position. But POWR gaps down viciously and continues to sell off and proceeds to wipe out the remaining gains, leaving us with an 8% gain. If you would have done it any other way, any other time period, except for I traded scared and it worked this one time. Other times it doesn't work. POWR it worked. But POWR, the biggest key why it was sold early, the most important thing is that this arithmetic chart had a totally different look, and it already was getting sloppy, and then as you can see, it just got ugly. And when it got ugly and the market was ugly, I was out. Lesson learned, hopefully. So next time we don't hold to the 200-day moving average and lose those big 200% gains.